Would you rather buy a $500,000 house at 8% or a $550,000 house at 4%? That's a good question. I could tell you that today's market is determined by the interest rate. Not entirely. There was a time there when interest rate would change 1 point. It'd go from 5 to 6. Prices would come down 10%. It'd go from 5 to 4. Prices would go up 10%. It's about 11% in what we call buying power. A buyer, if a interest rate goes from 5% to 4%, then that buyer can afford 11% more based on how much income they're making, right? If they make $100,000, they can spend 40% of it. They don't have any car loans, student loans, medical loans, whatever. Then they can borrow about 40%, right? About $3,500, maybe a little less than that, $3,400, whatever, right? That's what they can afford. Well, guess what? If interest rates go down, payments go down, guess what? They can buy more, right? Who does that help? Does it help the buyer? It does not help the buyer. It helps the seller because they get a bigger price, right? The payment will probably stay the same for that buyer. They'll just buy a more expensive house, probably the exact same one they could afford before because prices went up. So why would you rather buy a house at 8% at $500? Because prices will come down. They always come down, right? And when prices come down, you'll be able to refinance. Will you pay more in payment for the first year, 2 years, 3 years, whatever it may be? Yes. Will you be able to save $50,000, $100,000, $200,000 when you buy it? Yes. I would rather owe less money and own something than have a lower interest rate and a higher price and still owe that money. You still got to pay the $550 at the lower interest rate. It's an extra $50,000 that you need to come out of your pocket. And guess what? You can't call your boss and ask him for a pay raise because you spent an extra $50,000 on the same house. It makes the most sense to get into a property and then try to refinance and get it down. Obviously, you got to be careful. You don't want to be house poor and not be able to afford your payments. But if you were to pay an extra $6,000 over 12 months in interest to save $50,000 or $100,000 in house purchase price, I mean, come on, it's a no-brainer.